We'll start off with that. We'll do a summary for what we saw happening this week with the stock market. It's been an interesting week, actually. Here's this overall chart that we've been looking at for quite a while. And so you can see the pandemic in there, the 2022 drop that happened with the higher inflation. The drop that's right over our heads was the Liberation Day, the first, announcements of these tariffs. Um, and really to this week, the market was coming down all week. Right, a lot of big companies, especially retailers, were doing their earnings reports, and I thought the most interesting one was Walmart because they're kind of a bellwether stock to really see what happens.
Yeah, and this is his first miss in 3 years, really.
Yeah, so it's the first time that they missed the earnings expectations because I think the average right now in the last 3 or 4 years has been like 78%, almost 80% of
Mhm.
companies beat their expectations on the S&P 500. So to miss is kind of a big deal, and the reason that they missed was because of tariff-related costs. And so what happens there, again, the tariffs are being paid by the company that's importing the good or the consumer if that company decides to pass along that cost. Walmart's kind of in a tricky spot just because of the fact that they've got, a low cost concept.
Mhm.
And so they've decided, at least so far, to kind of eat some of this, tariff cost, and it cost them in their earnings and it cost them in their stock. They were down about 4% or so, that day as they announced the earnings. Uh, and so, but that's going to be very interesting if you think about what's going to happen. I'm fascinated to see all of these reports and what different companies are doing, and because we're starting to see finally the real effects of the tariffs come through. And so, if you're Walmart, do you eat more of the tariff and hurt your earnings, which then can hurt the stock price, right? Or do you pass more of the tariff on to the consumer, which then could create what we call demand destruction? When the price gets up high enough, people pull back, right, on what they're buying.
And then you're still, again, hurting your earnings.
Then you're still hurting because now you're hurting your revenue, which could eventually hurt your earnings,
Yeah.
right? You might be passing along. So, companies are going to trying to find that balance between those two. And so that's going to be, what's going on with all of these companies. So I thought that was fascinating, just from a standpoint of, starting to learn how this is going to work and what the impacts are. Because, we're at a 18% average tariff, according to the Yale Budget Lab. Um, Across the board, and, it's been a kind of a moving target. Right after Liberation Day, it was 22%, so and we're still kinda working our way through all of these things as far as that goes, but the big news this week was really the Jackson Hole speech. So the Fed, they meet in July, which we already had, and then they don't actually have a traditional meeting in August. They meet with a together, and a bunch of other, central bankers come into Jackson Hole, Wyoming, and then usually at the end of it, Chairman Powell will give a speech, and it's a little bit different speech. It has potential to move the market quite dramatically in the past, partly because they can there's no question and answer.
Yeah, you can curate kind of what
Yeah.
message you want to present to the market, what and what you want the market to hear.
Yeah, so in 2022, they were really trying to get the market to have trouble, right? Because, you know, what we call job owning. So one of the ways, so maybe I don't, if I'm a Fed Reserve governor, I don't have to raise rates as fast if other parts of the economy are not doing as well. Like if the stock market is falling, and in the end, in 2022, it fell 28% from high to low. Uh, that's a way to kind of slow things down. Okay, so in this speech today that just happened, things are kind of the opposite because what they're looking at is a slowing, economy. So last year, for example, the gross domestic product was up 2.5%, right? This year, first half of the year, it's up 1.2%. So basically half of the growth, and projected to continue to kind of even slow more as the impact of these tariffs come in. So the Federal Reserve is trying to keep the economy rolling, but they don't want to get it hot where it creates inflation, right? Well, and of course, last year we averaged per month 186,000 new jobs created. This year, 35,000 new jobs created, right? So Chairman Powell was talking about basically seeing the, instability in the employment market because they have a dual mandate, try to keep employees, you know, employed and to try to keep inflation, on core PCE down to 2%. It's currently at 2.9%, right? So, um, and it's been climbing actually, and we've seen wholesale prices climbing. So we're going to see inflation kind of coming through. So again, the Fed is getting pulled both directions, right?
Mhm.
One direction says, "Oh, we should, raise rates because inflation's coming." The other direction says, "Oh, we should lower rates because, employment is starting to get soft and the economy is starting to get soft." And so, but today he talked about, leaning towards lowering rates. The Federal Reserve is leaning towards lowering rates. And of course, the bet on the market went from kind of in the 70s on a rate cut and, a percent chance of a rate cut in September to, up into the mid to low 90s actually for temporarily. So, um, and so think about that. One of the reasons that they would have to do that, if you're going to choose a side, and let's say you're going to choose the rate cut side and
Mhm.
you're not going to try to fight inflation. And we'll talk about why that makes sense in a minute. Then you want to talk more positively and you want to use Jackson Hole to try to boost the market. Because again, maybe I don't have to lower rates as much, right? If I can get the economy going better, at least through the stock market
Mhm.
or any other types of market. The bond market went up, people have more money when those things happen. So it's very calculated. Believe me, there's no question in my mind whatsoever that every word that comes out of these Fed governors' mouths are generally exactly on some type of, concept of what they're trying to accomplish at that point in time. And so market's up almost 1.7%, 1.6%, something along those lines, as we speak, or at least when we started the show, and makes for a positive week, even though we had down days almost every day.
Yeah, we're right at near that all-time high
Yeah,
still.
exactly, and not surprising. So the Fed is trying to help. Now, let's talk about the other side. The reason you would choose to try to help the employment side of your dual mandate instead of the inflation side is because normally when you're lowering rates, the danger is you are stimulating more buying,
Mhm.
right?
With the demand, you generate more inflation.
Right. But demand is dropping. Overall retail sales are down for this year, for example. Corporate spending is down a lot actually for this year. CapEx spending is down also. So really the inflation that is normally being caused by a economy that's too hot or consumers that are too interested in spending or businesses that are spending too much, um, that's how inflation normally happens, but that's not what's happening here. What's happening here is inflation is being caused by a tax.
Mhm.
Right? We're taxing goods coming into the country and we're passing that along. And some of that's going to end up, if not a lot of that, is going to end up in the price. We saw that in 2018, price went up. Almost all of the tariffs were passed through in 2018, for example. And even the domestic producers raised their prices up also,
Mhm.
even though they didn't have a tariff because they could. And so that's, that's first of all, it could be, and Chairman Powell talked about this, it's a one-time thing.
Mhm.
Theoretically, it depends on what happens. If, what's going to happen next year and the year after with these tariffs? Are they going to get worse? It's possible. It seems like they're still adding things. They added more this week of 400 line items that they included as part of the steel, aluminum, and
Copper.
copper piece. So like a fire extinguisher and what tariffs, and so they're really going after. They're still broadening these tariffs and trying to grab more money, out of the system. So if your inflation is being caused by a tariff instead of being caused by demand, and if demand is actually dropping, it gives you room to lower rates, and they probably could do it again next month after that, and whatever happens because there's not a lot of risk of creating a massive inflationary bubble on a demand side because rates are lower. Um, and so, but it might help the economy to stay out of a recession and keep the job market more stable as far as that goes. And Powell did talk today about things can get out of hand pretty quickly.
Yeah, one thing that was also interesting, he was talking about how the labor market is kind of changing because of demographics. You have a lot of people retiring out of the market, and then you also have limited incoming. As you limit immigrants to the nation, you're also limiting the amount of people that can take jobs.
That's right.
And so, even if you're creating little jobs, if there's little growth in the actual labor force,
Right.
then it's okay too.
Yeah, that's right. Yeah, exactly. I mean, if the labor force is growing dramatically, through new births and through immigration, you've got to have new jobs or you're going to end up with a very high unemployment rate, right? So, and unemployment has been creeping up, but still is in the kind of reasonable level, although it's a big lagging indicator. So anyway, that I thought, those pieces are quite interesting in terms of how this market is reacting to all of this as far as that goes. And um, we did see kind of a tech sell-off this week at the beginning, a rotation into defensive sectors that were doing well. Value stocks were doing better. People were nervous about this speech. There's been some periods of time. I remember in 2022, the market dropped over 3%
Mhm.
after the speech. And again, that was on purpose. That's what they want. I think this is what they want here, right? Certainly, after hearing it, you realize, oh, okay, they're leaning towards rate cuts anyway. So maybe we don't have to do a bunch of rate cuts if we can get the market to kind of create
Yeah,
some
and
wealth feeling.
you saw a lot of companies that depend on basically financing, so home builders, energy, were all running because, they need debt to basically to grow.
Yeah, that's right. Yeah, companies that use a lot of debt or their consumers use debt like a mortgage, those types of things. We're looking at those. Those are up 5, 6, 7% today. So the rate cut concept is overall a great idea. However, the one piece you have to consider here is, and this is and Martin Zweig had a book that I read a long time ago, and he had a whole chapter in there called "Don't Fight the Fed." So when the Fed is lowering rates, right, you basically should be, invested,
Yeah, as much
right?
as possible.
Right. Of course, the problem is that the data that we're looking at doesn't go back to the last time we had tariffs this high, mainly because you're looking at a stock market that's so different than today's market, and that was back in 1930, and it's basically the Great Depression, and so you know don't fight the Fed. Does that outdo high tariffs? Right? This is the whole thing is all about this. If you take a bunch of people out of our workforce through, deportations, and you add these tariffs, that's on one side, right? That's going to slow things down. That's going to create economic potential problems. And on the other side, we have artificial intelligence, which has been very exciting. It's been
Mhm.
really driving things. NVIDIA is going to be doing their earnings, next week. That could be a big push. It has been in the past, although the bar is getting higher and higher and
Yeah.
higher. And I think even if they jump over it, it's going to be hard for the market to get super excited like they did, kind of the first few times that they did it. But um, nonetheless, so that's an exciting part for the market, right? Combined with, rate cuts that are happening, right? And so who wins here? Okay. Well, there's no data, right? How many times have we had this type of deportations? There's some data, right? And it's generally been inflationary, okay?
Yeah, and you're starting to see it in very labor intensive goods that tend to be of immigrant labor.
Right.
We're starting so produce
Produce, yeah.
is getting
I think
expensive.
raw vegetables went up 38.9% year over year in the last report.
And I've been hearing like, construction like roofing and stuff like that, their pricing is going up too.
Yeah. And so it's because you can if basically if you reduce the supply and the demand stays the same for roofs, for example, and you can't do as many roofs because you don't have as much labor, as a group, as all the roofing companies, the price is generally going to go up because it can, and so that's happening.
And unfortunately, those jobs aren't replaceable by AI. So even if you
Yeah.
lose those jobs, even if you use AI, you can't replace a lot of those jobs.
Apparently, they're not even replaceable by American citizens either, which is part of the problem. And so, even in Florida, I've been reading articles that farmers are complaining they can't get American citizens to come out and pick the crops and do the labor. They get very, very few applications, even though they're paying, an okay wage. I wouldn't do it,
Uh,
but it's tough.
yeah, I've also heard that some farmers are just trying to stave off wasting crops. Is they're actually planting less because they're not sure if they can harvest everything.
Yeah, so that's the conundrum here. Stock market's at an all-time high nearly, right? Looks pretty good. Look at that chart. If I didn't know about tariffs and all the other things that are creating problems, I'd have no problem with that chart, just like we didn't have problems when it dropped back in, the summer of 23. We stayed in and we continued to go because, the metrics made sense. And I think this market right now and the participants in this market really, are banking on tariffs being a minor issue, which it could be, very much so. Could be something that isn't such a big deal, could be a one-time effect. It's just in the past, if you go back far enough, when we've had tariffs at these level, it hasn't been good, right? And they don't stay at this level very long, which again could be another good thing. Maybe it falls off pretty quickly and we get back to normal. But it seems like they're just going the other way. We're continuing to add tariffs, continuing to, all of a sudden Brazil's at 50%, and well, we're pissed off at India for selling Russian oil. Actually, it's kind of funny. It's actually two private companies in India are arbitraging Russian oil.
Mhm.
They're buying it and then reselling it at whatever the cap is, $60 a barrel, and they resell it at whatever, and so they're going after the entire country with a 50% tariff because there's two private companies deciding that they want to try to take advantage of the situation, which is kind of bizarre, but nonetheless. And then China, of course, is doing the same thing. Well, I don't know if China's not doing the arbitrage as much. They're buying Russian
They're
oil.
basically
Yeah,
keeping it in
they're
there.
using it.
Yeah.
Yeah, yeah. That because I know, that's what they're basically doing, arbitraging the oil. And anyway, so, it's become this thing where we don't know that it's not going higher, that's for sure. Um, Especially if it seems like everything's okay, which it does at the moment, right? All right, so anyway, that's our summary for the week. The market's doing great. Bond market's up. There's some really good things happening altogether. Hopefully, things continue to roll forward as far as that goes. But we're, still being a little cautious, trying to see how these tariffs are going to unroll and hit these earnings, and how that's going to happen, what's going to happen to the labor market and such too. And because it can easily tip. I've been doing this for a long time, and the one thing I realized is that before you know it, you could be going downward pretty hard on the economy, on employment, and different things on those lines. And what we have discovered is this ability to send out stimulus checks and do all those types of things. I'm not so sure we have as much money to spend right now with the deficits we're already running, and the bond market might really not like, because they've talked about sending out checks, tariff checks to kind of stimulate things, which I think would be a good idea, other than the fact that it would create more debt, which I don't like, and it would create a bond market that might really struggle with that.
Yeah, especially since like the the last tax bill just added so much to the deficit already. So the
Right,
bond market is always feeling stretched.
right, exactly. All right, good.